FTX, the second largest cryptocurrency exchange platform in the world, that recently collapsed in 2022. What happened and why did it disappear? FTX had achieved tremendous success as a cryptocurrency exchange platform, with the second largest one in 2021, by generating a total revenue of $1.02 billion in 2021, recorded daily trading volumes as high as $21 billion, exceeding $385 billion for a year and averaging around $10 billion. FTX's revenue had increased in just 2 years with an incredible 1,000% growth rate. Net revenue increased 2,000% to $388 million, achieved by more than 1.2 million users across desktop and mobile platforms. FTX's success was evident through the remarkable appreciation of its usable coin, FTT, which surged by over 850% since the beginning of 2021. And spending $135 million sponsorship deal with the Miami Heat, and has also enlisted globally renowned figures for its advertising campaigns of the brand. FTX's remarkable success can be credited to its CEO and co-founder, Sam Bankman-Fried, along with Gary Wang. Sam played a pivotal role in launching FTX after founding Alameda Research, a quantitative trading firm specializing in cryptocurrency, and had already achieved significant success in the crypto space, which drew substantial investor interest and contributed to investments in the new cryptocurrency exchange platform, FTX. Sam Bankman-Fried was known for his simple and unassuming lifestyle, refraining from extravagant clothing or luxurious vehicles and preference for consuming vegan food. He also known for his substantial charitable donations and concept of earn to give, which started with the goal of becoming rich to contribute to the betterment of others.
Earn to give, and that's exactly what he's doing.
So let's say that you have $100 and you want to figure out what you can do with it to help the world. Earning to give is thinking about which causes, which charities save the most lives per dollar. This $100 can go as far as it possibly can to help the world.
At 29 years old, he had already given more than $50 million to causes like global warming, COVID-19 relief, neglected tropical diseases, and animal welfare. He had plans to contribute as much as $10 billion throughout his lifetime. His philanthropic dedication has established him as a truly charitable individual devoted to making a substantial global impact. FTX's success continued unabated until the day in November 2022, CoinDesk reported on the balance sheet of Alameda Research as of June 30th. Alameda Research held assets totaling over $14.6 billion, with 70% of that total consisting of FTT, which were managed under Sam Bankman-Fried, the current CEO and former CEO of Alameda. FTT serves exclusively as a token exchangeable for discounted trading fees on FTX, making it difficult to convert into cash. Consequently, this had raised significant concerns among users and further underscores the unusual relationship between FTX and Alameda Research. As a result, Changpeng Zhao, the CEO of Binance, announced via a Twitter post on November 6, 2022, that he would be exiting from FTX by selling all the FTT tokens owned by the company, which had a total value of over $580 million. This was the beginning of FTX's collapse in only 2 days. After the announcement, there was a rapid and widespread sale of FTT tokens, with total withdrawal value surged to $10 billion during the period from November 6 to 7, 2022, and impact on the price of FTT, which dropped from around 24 on November 6 to a low of 2.28 on November 10, and then November 8, 2022, withdrawals from FTX were suspended. This ultimately led to the collapse on November 11th. Sam Bankman-Fried was arrested in the Bahamas on December 12, 2022, following criminal charges filed by the central government in New York. He was facing a multitude of fraud charges within just 1 month after FTX collapsed, with a valuation of over $32 million.
2019 and November 2022, when he stepped down as CEO of the company.
Right? Well, let's ask an FTX investor who lost more than $2 million in the company's collapse. Evan Luthra joins me now. And Evan, it's good to have you with us this morning. Let me start with the latest coming out of the Wall Street Journal, that FTX in last October raised roughly $420 million in funds. $300 million of those went to Sam Bankman-Fried. He cashed out some of his personal stake. How does that make you feel?
So from all this fiasco, I've already come to realize that Sam Bankman-Fried is a bad actor here. It's not surprising anymore that he took trillion millions of that personal capital for himself, because we already know that this is a bad actor, this is a fraud, this is a criminal. Everything is done as far as FTX is concerned, spending users, spending all the community's funds as like his personal bank account. This is not surprising anymore that he's the same way as treated his investors.
Right.
So it's less surprising after hearing everything else that he's done over the last week.
So you bring up a good
Caused by this collapse, according to Reuters report, Sam Bankman-Fried did transfer $10 billion to Alameda Research to address liquidity issues within the company, which was one of the reasons behind FTX losing its liquidity and encountering various problems. Furthermore, at least $1 billion went missing following the collapse of FTX. Moreover, there had been numerous reports concerning Sam Bankman-Fried's personal spending habits, which contradict the image he presents to the public. This includes his penchant for wearing luxurious clothing and accessories, hosting extravagant parties involving substantial expenditures, and indulging in his favorite food, steak. These actions have sparked a significant debate and cautionary sentiment within the philanthropic community, directly affecting the credibility of charitable work and the broader cryptocurrency industry worldwide. And then, who will be the next one?